Hey everyone, and welcome to Earnings Cheat Sheet for Friday, May 9th. It's Alexis, Garcia, and Ed Carson here, and we'll be giving you updates on all the upcoming earnings reports to help you prepare for the week ahead. So, Ed, earnings keep rolling in. What do you have for us today?
Yeah, I have Walmart, Alibaba, and Sea Limited.
All right. Well, let's start with Walmart, which is scheduled to release Q1 earnings on Thursday, May 15th. Earnings for the retailer are expected to fall 5% to 57 cents per share, and revenue is seen climbing 2.5% to $165.7 billion. And here's why we're watching Walmart. We'll be looking for any sort of tariff or supply chain news. Executives may also have commentary on port slowdowns for products, and will Walmart mention potential price hikes to their goods? And will that matter if shoppers are trading down? So, Ed, Walmart is one of the first major retailers to really post earnings, and they'll have results too for the latest holiday spend period. That could be interesting. And Walmart, again, along with a lot of earnings this season, a lot of eyes on what they have to say about tariffs. They heavily source inventory from abroad. So, what are you thinking about with Walmart, Ed, as earnings approach next week?
Yeah, I mean, earnings have been doing pretty well. There's been triple double-digit growth for several quarters, which is not easy to do when you're that kind of size and the retail business, a narrow margin business. Reportedly, Walmart had told, and some other retailers had told President Trump, no, we won't raise prices. Now, I don't know what they actually said, if they meant right away. I think next week's report is also important because it comes right after U.S.-China trade talks, and there's basically we're at the point where if you don't cut tariffs now, then probably even retailers like Walmart and those giants that have probably built up a lot of inventory, they'll run out of stuff by the time, even if we restart, like in 2 weeks, if we start the China trade for whatever reason, there'll be some shortages in the short run. So this is going to be a key week. What they'll have to say, it's like, we've got 4 weeks left. They might say something like that, or maybe they'll be very vague, or like, we've got to, they probably won't be too harsh, but I think that'll be very important. Uh, not just for Walmart, but for a lot of retailers. This is really kicking off the retail sector. Walmart has amazing logistics, so if anybody can handle this kind of issue, they can. But so definitely want to hear how that goes, and just other things like how are they doing? Is e-commerce? And just a more prosaic, is e-commerce continuing to grow well? I mean, that's quietly become a big area of strength for Walmart, and just see how that's doing. In the latest quarter.
And those high-end consumers, Ed, were a strength for Walmart earnings last quarter. But let's hop on over to the chart. I'm on the daily here. We can see broke out of this cup with handle base. It's still in a buy zone. If we switch over to the weekly, pattern recognition here is picking up a cup base with a 105.30 buy point, and we see that RS line blue dot. That means the RS line is hitting new highs there as it's building up the right side of that base. But let's just switch back over to the daily, Ed. So, what are you thinking about as Walmart approaches earnings, and what are you maybe looking at in this chart?
Yeah, I mean, the left-hand side of the chart, it's sold off. I mean, what's interesting is that normally Walmart defensive, but in a tariff environment, we're still not really sure. I mean, it's bounced back, so get me wrong, it's doing better than a lot of other stocks, but it isn't the kind of saying, yes, customers will probably trade down to a Walmart in a tough economic situation, but it is just a little bit different dynamic. So it's maybe not as safe as you normally would. But we'll see. The volume after that first huge spike, when the market really first rebounded on certain moves by Trump to sort of scale back for at least a while the tariffs. But since then, the volume has been dried up. I mean, it's sort of like, so the breakout came on light volume. There is that. I think the breakout was at a nice spot because if you drew a line to the left from the buy point, the sort of the prior base was there. So there's a lot of trading around that level. I mean, look, this could be actionable when earnings come around. I mean, if it holds in there, it goes up. It's probably not going to be an amazing mover. And as I said, it's not as defensive as maybe, or as for sure thing a defensive, but it's still been a pretty strong performer over the past year. I mean, it had been sort of a laggard for quite a while, but that relative strength line has actually been pretty good for quite a while now.
So, Ed, when you're looking at this, then if the stock perhaps jumps on earnings, what are you looking at here as a potential buy zone? I know the weekly has this 105.30, but between where it currently sits at about 97 to there, is that a potential buy area?
I mean, if it you could easily form a handle here, like an alternate handle, which could turn out to be a handle on the weekly chart. So that could be a place if it gets above these short-term highs, say, depending, like assuming we stay range bound and goes in earnings, that would seem like a place that you could enter. Again, just knowing, I mean, it's nice to have some mix of something more defensive along with some higher names as well. But this one's looking pretty good.
We talk about buying, but it's also important we have some sell rolls. So if you did buy on this breakout here, or perhaps got in earlier, how are you managing risk then ahead of earnings?
Yeah, you have to keep in mind if there's a possibility, especially with this report. I mean, where they could say something that you would really surprise on tariffs. It could be very positive, it could be very negative. So you could imagine a much bigger drop or a bigger move. So there's not much of a cushion here. And so if you're a recent buyer, yeah, you might want to take profits, or at least partial profits, or even just exit the position entirely heading into earnings, or switch to an option play because yeah, this there's not much cushion there.
All right, Ed. Well, let's move on to our next name, which is Alibaba. That company is scheduled to report Q4 earnings on Thursday, May 15th. Earnings for the Chinese e commerce retailer are expected to rise 24% to 174 per share, and revenue is projected to climb 8% to $33.105 billion. Here's why we're watching Alibaba. Will be paying any attention to updates on AI initiatives, and we'll also want to see if their cloud business can continue to accelerate with sales. And for e commerce, again, we want to know what that tariff impact is. So, Ed, we've got a lot of China stocks have earnings due next week, and China did announce a new stimulus measure and lower interest rates on Wednesday this week as the trade war with with the U.S. continues. But it didn't really seem like that was enough to boost China stock. So, what are you keeping an eye on here as this group comes up for earnings?
Yeah, there are a number of stocks that are looking pretty good, and Alibaba is one of them. Yeah, I mean, Alibaba is a lot like Amazon. It's e-commerce and cloud computing and some AI. So that the AI sort of lifted the stock, earlier this year, and then the market sold off with just with everything there. I don't know how much exposure Alibaba has directly to the U.S. It's not like Temu and PDD. It may be just more of a situation of the local economy. I mean, it's like if like the US, is going to face economic pain, but so is China. I mean, China's clearly going to face pain. They're basically trade is cut off with the US. Yes, they've tried to mitigate that, but I mean, let's be real. That's a serious blow. So that is an issue for them, for Alibaba and all these other companies. Can they continue to grow in the face of what could be some really big headwinds? Not just their other trading partners. If they say, "Well, I'm going to trade with Southeast Asia instead," Southeast Asia faces some tariffs too, as we'll talk about with C. So it's just a tricky thing. There's so many levels of risk with buying a Chinese stock right now, even though this is one of the better ones.
Well, Ed, let's take a look at the chart here because we could see Baba had this amazing run here from this February breakout. But like a lot of stocks, we saw this sharp pullback here, but it's rebounded and it's just flirting with retaking this 50-day line. So, thoughts here on the chart?
Yeah, big sell-off. It basically round trip that breakout, found support at the 200-day line. The bounce after the first couple of days has been on light volume. Now, again, they trade also in Hong Kong and other things, so it's a little bit different, but still there hasn't been a lot of volume on this bounce. One could imagine that after earnings, that if it went above the 50-day line and above the highs from a couple of days ago, that would be maybe an early entry. There is probably a base there. If the stock went up a little higher, then you'd see a consolidation. It just isn't showing up because we're too low. But if it moved up a little more, so that would be the thing. You'd like to see some volume, though. One of the real tricky things is that there's rumors that like, well, what how if the U.S. China trade talks, if those come out bullish, this stock could jump. And then what do you do? Because obviously a major drag on Alibaba is the China tariffs, maybe even more so than earnings. So that makes it really tricky. You might say, well, I'm going to go and buy the stock. But that again, there's so many levels of risk. Sometimes you just have to say, you know what? I'm going to let this one go. I'm going to let this one go, knowing that it might work. So that comes ahead of earnings. Again, I'd like to see volume on that, but this is doing all right. That was a big, big, heavy volume sell off and just not in a light volume comeback.
All right, Ed. Well, let's move on and take a look at Sea Limited, which reports earnings on Tuesday, May 13th. The Southeast Asian e commerce leader is expected to see Q1 earnings come in at 81 cents per share versus a loss of 4 cents the previous year. And analysts expect revenue to climb 32% to $4.913 billion. And it will be the fourth quarter of profit with sequential gains. And here's where we're watching Sea Limited. Some analysts are concerned again about tariff impact in Southeast Asia. So we'll be paying attention to that and any comments on the broader economy. So, we saw C stock kind of get hit after Trump announced these Liberation Day tariffs on April 3rd. But as you point out at here, Ed, analysts are still concerned about the trade policies being a potential headwind here. So, any thoughts on Sea Limited ahead of earnings?
I mean, C's growing very strong. And first, let me disclose that I have a position in this. Uh, so we'll see about that. But it's growing very strongly now, switching back into profitability in a way that hadn't really, at least depending on how you measure it. Growth is strong. We'll see how that goes. It doesn't really trade really, it's not really involving the US, but this e-commerce and gaming firm, if all these Southeast Asian economies struggle, that'll be a problem. But so that this one does also has a pretty high valuation. So if it needs to have strong results, I mean, I'm not saying it doesn't have to be, I'm not saying everything has to be perfect, but that's a pretty high price to earnings ratio. There's going to be really strong earnings, so that's going to come down, assuming that the profits come in line. But there's expectations here. I mean, that just raises the risk that you could see a big drop because if there's any disappointment, or especially if it's joined with bad news on, perceived bad news on the trade front. So it's just something to watch, even though it's done very well. The RS line is at a new high. Um, there's the buy point here at 147. Oh no, just like, but you probably could have bought it at 137, sort of a double bottom. And there's also sort of a downward sloping trend line, as you could do from the top of the base. And I think that's when I got it when I went over the 50-day line. Um, I don't think you can do anything with it now until earnings, and then we'll see. It could get the problem if it broke out here is that I don't know if it'd be super extended from the 50-day line, but it would be getting up there. So that would be just an issue. It's already 14%, and it's not that 50-day line isn't going to be surging higher in the next few days. So if that breaks out, it's going to be pretty extended. It'd be great if it could maybe pull back. I mean, at least for other people, pull back and then break out maybe. But it may not offer the greatest opportunity. And like some other stocks, the volume was light on the upswing. I mean, that's just something to it's just a fact that there hasn't been a lot of volume there.
And Ed, I just want to take a quick look at Coupang because they also have earnings. They reported on May 6th, and we saw broke out on earnings but came back. But we always talk about why it's important to maybe look at other names within the same group or sector. So anything that on the Coupang chart that may be interesting to you.
I mean, it was a nice move on earnings, and it pulled back. Yeah, a little bit below the buy point, but that's still very much actionable. That provides maybe an opportunity to buy it. So that one did well. I think Mercado Libre, Meli, which is Brazil. So this was Coupang is Korea. Mercado Libre is all through Latin America. That did very well. We'll see. We'll see how they all execute. That's what it really comes down to. But C is doing well, but it has to deliver. I mean, that's what it comes down to.
All right, Ed. Well, those were some of the big names on our radar, but let's take a look at a few more. We've, like we mentioned, we've got a lot of China names reporting next week. So let's start with JD.com. They're scheduled to report on May 13th. And again, a little bit of a messy chart here. We see this sell off here in March and April. Thoughts here on the technical action?
Even before the sell-off, it really wasn't leading like Alibaba. I mean, it was doing finally getting somewhere, but it was, but it just they're going to need a game changer. It's going to need to really move back above the 200-day line, 50-day line, and then I may start paying attention to it. But I don't know if I'd really go in it. I don't see it switch. It doesn't have that cloud computing thing to boost growth in the way that Alibaba does. So this one needs a lot of work to make me excited about this versus some other names in the China space.
All right, well, let's take a look at another name. That's Futu Holdings. They report May 15th. And again, we see the sell off here. It's rebounding. It retook that 50-day line. But thoughts here?
I mean, look, I can imagine in a different environment, you could have tried to use this as an early entry, getting above the 50-day line. It's just really what it is. This is really, really a volatile stock on a daily basis, on a weekly basis, on a monthly basis. Huge moves, but I don't know what you do with this ahead earnings. This could swing all over the place. Uh, this is one to try to find early entries, but I don't really see an early entry because earnings are coming up. So it's just strong growth here. A lot to like about the fundamentals, but very, very wild.
Right. Well, we have a couple more China names. Maybe Ator Holdings might catch your fancy, Ed. Again, as the story with a lot of these stocks, big sell off, but it's rebounded and surging over the last couple of days, retaking the 50-day line.
Yeah, and Ator didn't sell off in December like a lot of other names. I mean, it didn't make progress, but it didn't sell off like a lot of China names did. So it did well, and it tried to break out, but then it just succumbed to the way things are. Again, this would sort of almost be seen as an early entry, almost trend line entry, 50-day line, but earnings are coming up. So it's just like, it just seems like too much of a risk there, but it's been doing well.
All right, let's take a look at Tencent Holdings. They report on May 14th, Ed. And again, we can see here in consolidation, but another one that seems all over the place. So, thoughts here.
I mean, it doesn't look as bad as this is up in like this is a Hong Kong listed stock. It trades over the counter. Even in the US, it trades a fair amount for over the counter, but it's a huge company. If you look on a weekly, it doesn't look as bad, but there are going to be those little mini gap ups. And so there was a huge drop, when the tariffs came in, there might have been a holiday and two. And so by the time it opened, it just went completely down. There not much volume on the way back, but otherwise, and if it weren't for that, that's the downside in the earnings. But earnings have been strong, probably going to slow a little bit this year, but this would otherwise might be seen as an early entry if it weren't for earnings coming up. It's actually above the 50-day line, unlike Alibaba. Those are the two giants out there in China.
All right, let's take a look at Tencent Music, which reports on May 13th. Again, I'll stay on the weekly here. This one in consolidation of the 1577 buy point. So, thoughts here on the technical action.
I mean, maybe if it gets above the highs from a few weeks ago, there's a slightly early entry, but uh, this one we'll see how it goes. It needs to get above that to be interesting.
All right. Well, let's take a look at some retailers, shall we? Starting with On Holding. That company has earnings May 13th. I'll switch back here to the daily. And again, we saw this breakout back here in January, but has really sold off, rebounding, but just getting to that 200-day line. Thoughts here, Ed?
This one could really move a lot. This one and the earnings got really choppy too, and the interpretation of that. So we'll see. They make a lot of their shoes, I believe, in Vietnam. So and that some of the tariffs were rolled back, but that the potential for that to come back up, the tariff was enormous on Vietnam. It's back to 10% in the short run, I believe. But that's a potential thing out there. And even 10%, that's a pretty big hit to margins. I mean, maybe they can raise prices because it's fairly pricey. And so they're passing it on. Maybe they can hold that up, but that's still going to be an impact. Need to see how that goes. And ideally, it would gap up, then form some kind of handle. I mean, I just don't know if it really surged on earnings, it might feel extended already. And so that's what I would like to see with this one.
All right, well, let's take a look at Ross Stores. They post earnings on May 15th. And again, this one in consolidation, 163.60 buy point, but we see the ugly sell off. It's coming back and looking to retake that 200-day line.
I just want to know about what they have to say about things and like gathering material on prices and customer behavior. This is just too messy and too weak, even relative to things like Walmart. But I'll pay attention to it. But it's hard to see this one as being very actionable.
All right, how about we take a look at John Deere, also scheduled for May 15th. This one in consolidation, 515.05 buy point, retook that 50-day line Ed last week, but looking good so far here, Ed.
Yeah, there was that sell off in early April, but almost everything sold off in early April and then came back. I mean, so there was that huge drop, but yeah, sort of just above these levels in theory, you could see as an early entry, but we'll see what happens before earnings. The estimates, the earnings are not supposed to be good. I mean, we're having, you know, this fiscal year, and it's a second straight year of a big drop. So the fiscal year, so there's been a lot of declines. Stock has held up relatively well given that. But you know, I'd like to see that earnings turn around. It doesn't look like it's supposed to turn around for quite a while.
All right, well, let's take a look at Copart, scheduled for earnings on May 14th. This one does vehicle auctions for insurance companies and dealerships and other entities. Ed, we're still on the weekly here. Looks like this is in a buy zone after breaking out of a cup with handle base. So, thoughts here on Copart ahead of earnings?
Yeah, this one hasn't performed particularly well in the last, I mean, it's just sort of gone in line. It was a long-term leader at one point. I mean, it's real steady growth. I mean, there's some swings around COVID, and it'll be interesting to see, will they do better because if new car production slows down or prices surge, will used car prices rise? Obviously, they might have to pay more, or the other things, there might be costs on the other side just acquiring those vehicles. So that always makes it tricky, but it's one to watch, you know, as we're looking for signs about how used car prices and car prices are and who might benefit. This is a potential winner from that. See if that can outperform once again.
All right. Well, how about Take Two Interactive? That company is scheduled to post on May 15th. Again, we're still on the weekly here. Looks like there was a 3 weeks tight area a couple months back, but this one doing well. It's about 6% above that 10-week moving average. So, any thoughts here, Ed, with Take Two?
Yeah, I mean, we're hear all about the Grand Theft, the latest Grand Theft Auto, because the stock swung really wildly because there's expectations it's coming, and then it's like, oh no, it's not coming until next year. It's held up surprisingly well. I don't, you know, pretty big weekly whipsaw action. So it doesn't look that appealing to me in terms of, I mean, I understand if you had it for a while and like there's not, that's fine, but it's like, even though it's technically, you could argue that it's sort of in a buy zone, that that buy point wasn't necessarily still in force. It just is very volatile. And, you know, the earnings are going to have to shift out till next year, it looks like. So, interesting to see how that behaves, but I'm not that excited about the chart.
All right, well, let's take a look at CyberArk Software posting earnings on May 13th. Again, in consolidation here, retook that 50-day line last week. But thoughts here, Ed, with CyberArk?
Yeah, I mean, I would like it, I mean, to sort of pause here for a few days. If I were thinking strictly about buying it right ahead of earnings, because it's sort of pausing right above this 360 area, that sort of that was a previous high. So it's sort of at these levels. So if it could pause here, it would probably be too low. Well, actually, no, it might be long enough and high enough to be a legitimate handle, even though because it fell so much, so it could form a handle there. It may not show up on a market surge because it's consolidation, but that would provide an opportunity, not maybe on a weekly because it's not falling there, but at least on a daily there might be an opportunity to buy after earnings. You know, see how that goes.
All right, well, let's wrap with a look at Monday.com earnings scheduled for May 12th, Ed. Again, we've got a really lopsided cup with handle, and it looks like it's inching really closely to that buy point here ahead of earnings, Ed. So, thoughts here with the chart?
Just look to the left and see the massive moves on earnings. So you would have to have a lot of courage. You could
Probably
have
some Tums on hand.
yeah, you might have a real case of the Mondays if you depending how things go. So this has had some big gains, some big losses. You know, so if you were playing this ahead of earnings, it would seem like an option would be the only way to do it. There was some real messy action. It'd be nice to see, like, you know, it's not supposed to be great growth this year. You know, after some really strong growth for quite a while, that's slowing down. So it just may be shifting somewhat in how, you know, how things go. But it's one to watch. It has had good performance. Obviously, a lot of things have happened to disrail a lot of stocks. We'll see how it goes. But this one seems like a no-go before earnings because of that extreme moves it makes.
All right, Ed. Well, that wraps it up for this episode of Earnings Cheat Sheet. You can catch more market analysis with Alyssa Corm and Stock Market Today. That goes live after the closing bell. And we'll see you back here next week.